experts that. And we have Ajay Bagga joining us on the show. A very welcome on aboard your trays, Ajay. Thank you so much for joining us. And let's talk about the markets, the way how the markets scaled up in the week gone by. We are just about 300 odd points away from record high levels for for Nifty 50 index. But where do you see the markets headed? Because you are going to have the all crucial MPC meet as well.
Yeah, Cheryl, the issues are more global. The Indian markets are in a very good structure. The macros are very strong, and we have come off a pretty good earnings season as well. The projections are good going ahead. The issue is the global macro and how that works out in the second half of this year. That's the big issue. There were three major issues. One was the US debt ceiling. That thankfully has got resolved. So that is off the table now, the impact. And we are seeing a bit of a relief rally in the global markets on the base of that. The second is when does the Fed pause and how far will they raise rates? That is looking like they will pause in June now. And maybe we have done with the last rate hike for this cycle, but we'll have to wait and watch for July as well. And the third is the Chinese slowdown, where we had some good news where, wirehouses were reporting that China might bring a property market stimulus very shortly. And we saw metals going up based on that. So the big two issues would be the Fed and how does the Chinese economy catch up from here? Because a lot of the growth this year is India and China. And unless China starts performing well, the global growth comes down. Regarding the MPC meeting, not much expected. I think they'll be on a pause. The RBI has done a fantastic job. They got inflation in control, and our food stocks are high, food buffers are high. So monsoon remains a concern. Let's see how that plays out. But for now, MPC should be on hold. Over to you, Cheryl.
Right, so MPC should be on hold. Hopefully, Ajay, hopefully that's the way how actually it pans out. But what's your take coming in on the broader market rally that we are seeing? You know, for the most part of the week, if you look at the way how the broader markets were performing, they were pretty resilient. While you saw the Nifty actually stuck in a range, you had the broader markets that actually defied the market momentum. You saw a fresh record once again coming in for the mid-cap index. What's the way forward for the broader markets? Do you think some more steam left? Do you think it makes sense to even venture in any of these mid-cap or a small-cap name right now?
Fund money has been coming in small cap, mid cap. And if you see the SIP money, a large portion comes in the mid cap, small cap. So they have been beneficiaries of that. And as the foreign money has turned positive, we have seen selective buying in the mid cap zone by them as well. We are positive on mid cap, small caps because at this stage of the economy, normally, if the global macro was okay also or in the neutral zone rather than weak and weakening, I would say you could have gone all in into small caps and mid caps because that's the zone Indian economy is. But if you link it up into the globe, I would say that sticking to quality and sticking to more resilient companies might be better. Don't go into companies with external linkages right now because you might have some jolt globally. So there could be a slowdown. Hopefully, we don't have a hard landing in the US. Hopefully, we get off with a soft landing and hopefully a big Chinese stimulus comes in. Then these mid and small caps will really rally even further. They were in a catch-up game, right? If you draw them right from 2018 onwards, we have seen underperformance and now, last 6 months has been a good catch-up by the small and mid caps. It should continue on an India ceteris paribus basis, but the issue is global. So, little caution, but overall the growth is there in these two segments of the market.
Right, Ajay, Harsh joining in as well. You know, the Nifty PSU Bank continues to be on a tear. How are you looking at value within this particular sector? Do you feel that there's good value in the Nifty PSU Bank, or do you think it's topping out?
Uh, Harsh, it has been the outperformer over the last 1 year. And if you see the profits, they really bear it out. 104,000 crores for the 12 PSU Bank constituents versus 66,000 crores profits last year versus an 85,000 crore loss in 3 years back. So it is a remarkable turnaround story. Their capital adequacy is good. And the credit growth hopefully holds up. The issue that will come, there has been some rating agencies and a couple of private sector bank CEOs talking about this, that there is some amount of froth as far as the credit goes. The other overhang is, will RBI bring in some kind of, the ECL kind of a thing of stressed assets and to recognize and provide for stress assets, even though they are not NPAs yet. That was an issue about 3 weeks back when the RBI consultation paper was out. There is silence since then. We are hoping that that doesn't come in because that will be a huge burden for our banks. So let's wait and watch. But I think PSU banks will continue to do well this year as well. Last year has been spectacular. You won't get that kind of vertical growth. But in line with the market or slightly ahead of the market, they should continue to perform.
Right. Ajay, I'm very tempted to ask you a question that we've been asking a lot of market participants, is the fact that where do you see Sensex at 1 lakh in the next 5 years? You had Chris Wood also say that he expects, and in fact, he'll be disappointed if he doesn't see Sensex at 1 lakh in the next 5 years. What's your take on that?
No, definitely. And it's a very mathematical answer. Look at your economy. And if the economy continues to grow, we are growing at 10.5% nominal. And based on that, the earnings, corporate earnings should be 2 to 3% more than that. Mathematically, very easy to reach 1 lakh in 5 years. It might be in 4 years, it might be in 6 years, depending on the market momentum and sentiment. Markets don't move in a single line, unlike the other economic parameters that we see. There are dips and there are hikes in the markets. I think 6 months from now, markets will get a little wary of the general elections. It is going to be a very polarizing election, and that will have an impact on markets. That could be a good point to get in. But definitely, 100,000 on Sensex is very easily doable in the next 5 years at our growth rates. And even at the lower market cap to GDP that India runs at, we are nowhere near the frothy market cap to GDP that we see in some of the bigger markets. I think even on that, very easy for us to see a $6 trillion Indian market happening in the next 5 years.
Of course, Ajay's take on when and where he sees the 1 lakh on the Sensex.